Bitcoin has lost the $65,000 level. Bitcoin has obviously pulled back quite aggressively in the past couple of days. And in today's video, I'm just going to go through the technical analysis on where I think the price action is heading next, should you have missed all my updates on my second channel. So let's jump right down into today's video. We'll keep it nice and brief this morning. So here we have Bitcoin paired up with USDT. We're on the 1-day Binance chart here. You can see that we tapped into our higher range expectations just up here. We go ahead and clear this chart out a little bit, right? This was between $69,711 and $71,794. Okay, this was our expected fifth wave movement to the upside and completion. Here we see a complete rejection of this area, so basically marking the end of that fifth wave move to the high side. At the moment, at the point of recording today's video, as we continue to drop down at the point of recording, we're down 7.9% since the 29th of July. Quite aggressive, right? But this is still got some moves to the downside in my opinion. As I was talking about in my last TA video that I put out yesterday, we are of course looking for 61,800 to 62,487. Okay, but it is still possible that we come down a little bit deeper. This rejection that we've seen from the 29th of July, it is looking like a straight dropper at the moment. Now there's a little bit of a bounce that we saw between the 30th and the 31st. Okay, that comes in right on here as I just draw this up with our Fibonacci retracement tool. This bounce did move up to 66,849. Okay, that's 66,849. Let me go ahead and put this right on the marker right about here. Okay, this shows that we have that potential move to the downside between the 1 and the 1.236. And there's a little bit of an overlap right in here, right? So we can see right this little gap right here, this overlap with our range of expectation. There's previous resistance that could potentially turn into support, right? So that's kind of where things look to me like they are heading. It's going to be a three-wave correction as expected after a fifth wave movement. Okay, so here you can see WXYXZ, for example. Now, it's possible that this is a bit too soon to kind of complete, and we're actually more in a kind of A wave bounce than C wave like that, right? But for the most part, our expectations are a continued move to the downside here for BTC. But we are, of course, finding a little bit of glimmer of hope. The hope is that we've met minimum expectation from a three-wave Elliott wave theory point of view. Fine, not a problem. We're finding support on the 50 EMA on the daily time frame. That is the blue line coming through here, so that's looking pretty good as well. And we do have, of course, the 50 SMA, the yellow line coming through the chart here. These can act as supports. If we lose any of those areas and we lose this area of previous resistance that could turn into support, that being the 61,800, then of course the 200-day EMA at $59,500 is the one that's going to get pulled into question after that. Okay, but it's interesting. We've kind of hit our targets. We're kind of moving down quite nicely. We're finding brief support here at the moment on our 50 EMA. We still have that potential for a little bit more slippage to the downside. And yeah, everything's kind of tracking up quite nicely. Throw some smart money concepts into the mix here. You can also see just above the range of previous resistance support, this is an equilibrium area. Equilibrium, essentially, guys, as I've said many times before, is a 50% level between our discounted, where you're basically paying or buying Bitcoin at a discount, and your premium range, where you're paying a premium price for purchasing Bitcoin, right? So equilibrium is 50%. So 50% is a key area where we will find either support or resistance, and in this particular case, hopefully support right on where our previous resistances were. Okay, so that's looking pretty good from a smart money concepts point of view. We are still in a bearish structure on smart money concepts. We have not changed out of that bearish structure, so that still remains very much a bearish place to be for BTC at the moment. Okay, so it's looking okay. It's not awful. We have some decent correction here, but I'm expecting another surge to the upside once we finish all of this correction. Okay, so although, you know, smart money concepts shows us with some bearish things, we are of course at the moment, at the point of recording today's video, above the 200-day EMA, above the 50-day EMA, and above the 50 SMA, right, on the daily time frame. Those are all very positive things. I think smart money concepts is a little bit laggy in terms of it's only showing you what's already happened to a degree. Okay, it's not showing you you know, what's going to happen, but there are expectations that you can expect with smart money concepts. For for example, fair value gaps like the one left here. This happens to also coincide with our equilibrium and, of course, our previous area of resistance. Fair value gaps are points in time or points in price where liquidity was missing from the price chart, and the market likes to go and put liquidity back in there. Okay, so knowing that, you know, smart money concepts is in a bearish structure, we do expect a retracement to equilibrium. Equilibrium also happens to fall in line with a fair value gap, which also happens to fall in line with a previous area of resistance, which also happens to be in line with a 3-wave Elliott wave theory correction. So stack all those things together and we have this high area of probability, right? $61,800. So smart money concepts is an interesting one. I think we're likely to get a change of characterization into a bullish structure once we finish our correction and once we start to actually rally up higher than the 5th wave swing high that we see at the moment. Okay, so it's looking good from smart money concepts if you take into consideration everything else as well. Elliott wave theory, you don't have 5 waves, you never have 5 waves on their own. So 5 waves up, 3 waves down, another 5 waves up is the expectation. The only way that's not a consideration is under either an irregular flat or a running flat correction, okay, which means that this is actually a part of a much bigger correction to the downside. It's possible, but it's unlikely to be the case, but it's something that we need to kind of consider. That, for context, guys, would mean that we'd have an A wave here, a B wave that comes down lower than the origin of the A wave, and then a C wave that fails to go up higher than the A wave peak. It'd be irregular, but we'll see how that plays out. We'll know in due course, of course. So let's go ahead and take a look at some of the other things going on. Volumes here are interesting for Bitcoin. They are decreasing as we finish this move to the upside. And as we're having this correction to the downside right now, volumes are also decreasing here on the daily time frame. So it's not looking like a sustained crash, in my opinion. If we take a look at the stochastic RSI, here you can see why we're expecting a bounce. The daily's oversold, the 8 hours oversold, the 4 hours oversold, the 1 hour's oversold. It's looking actually quite good to find support here. Brief bounce and then further moves to the downside. So I'm looking for a 3-wave correction, right? And this is pretty obvious. If this is where we bounce, that's why I was saying that we have the ability to look at it like this, where we have that move, or alternatively, my preferred one will be that we bounce from here, we rally up into a previous area of resistance. Let's assume $67,000, and then we move down. This is going to be a very similar area where we end up kind of retracing to. The targets will change ever so slightly, but it'd still be a much cleaner 3-wave correction. So that's kind of what I'm looking for. And I think the stochastic RSIs is essentially kind of suggesting the same thing. Turn those off and bring on the divergence indicators. You can see here that we're fighting that 50 level, right, on the RSI. This area is basically your indication of bullish momentum, bearish momentum to a degree, right? This basically means, are you trending up or are you trending down? When you're lower than the 50 level on the RSI, this is an indication that you should be expecting a downward move. And if you're above it, you should be expecting an upward move, right? And obviously, it's not as clean cut as that because all it is showing you is the strength in the movement. It's showing you the momentum in the price action. It's not actually related to the price exactly, right? It's not saying because you're here, you're going to go up guaranteed, right? Because that's not how it works. It's only showing you whether or not there's actually strength in the current move of BTC in this particular case, right? It's not as price sensitive as the stochastic RSI. You use the relative strength index, the RSI, as a trend, okay? It's good for trends, which means it takes a series of candles to kind of form out a decent position, whereas the stochastic RSI shows you kind of more knee-jerk reactions in the market. So we're expecting a bit of a move to the upside on the stochastic RSI's. Momentum's likely to shift and start being a little bit more bullish. We can see that as well from finding support on the 50 EMA. The relative strength index here, though, is giving us a bit of an inconclusive market. It's telling us that we could be trending to the downside, but we could also continue our trend to the upside. So be a little bit cautious here. I personally expect us to continue this move to the downside over a sustained period of time. Okay, but that's not to say that we can't rally up beforehand, right? We look for September being a very interesting month. Obviously, we're now gone into August. So is August going to continue a bit of a bleed? Or are we going to see a bit of a relief in August before we get into September and all that kind of stuff? The RSI not going to be helpful until it kind of makes a decision on that. So it's one of those to keep a close eye on, but for now the stochastic RSIs are showing us a little bit more of a cleaner picture, but I'm not expecting an immediate reversal in the market either, taking a look at that. So on our daily time frame, Bitcoin's had a bit of a crash. It's come down reasonably aggressively. That's kind of as expected. It's now a low of 8.22%. It's gone down to the 50 EMA and found support there at the moment. On a weekly time frame, this is obviously one big red candle at the minute coming down. This has still got a lot of progression to the downside, in my opinion. The stochastic RSI also has loads of momentum in either direction. So if we're going to see the market continue to shift like this, that will be an interesting one. This obviously is a red candle so far for the week after 3 consecutive weeks. But you can also see last week was a dojo candle here with, well, it's actually more of like a hammer, I guess, to a degree. We have a really big wick to the downside, close and open very similar. This week could be very similar. If we do see another dojo candle, it will be very interesting on the market. But for now, as we are only on Thursday, we'll have to see how the rest of the week plays out. But of course, you know, Bitcoin is still in a pretty big bullish move to the upside, in my opinion. We've still got loads of progression to the upside to go. We're just barely kind of touching in on it at the moment, guys. I'm going to leave the video right there. If you found it useful and informative, smash that like button. If you're new to the channel, go ahead and subscribe. And if you haven't done so yet, go ahead and check out my second channel where I go through a lot more technical analysis on various different altcoins. You're not going to want to miss it.